Second quarter earnings season is heating up. Strong performance from the likes of Netflix and Citigroup are boosting the broader indexes on Thursday. But let's get more reaction now from Kevin Kelly, the Chief Investment Officer at Recon Capital Partners. And Kevin, welcome back.
Thanks for having me back.
All right, so it seems like earnings are getting a little bit more attention now that this obsession that investors have with the Federal Reserve seems to be fading. It's still early, but give us your take on second quarter earnings. So far, so good?
So far, so good. Earnings are what really drive the market, and we're seeing that because investors' expectations have been checked, right? Stronger dollar has already been baked in. People already knew that. Lower oil as well as consumer spending has been lowered. So expectations have been checked, so companies have been able to beat their expectations.
All right, we can now focus a little bit more on growth now that some of those headwinds have faded. Let's also talk about the technology sector versus the financials. I mentioned at the top Netflix and Citigroup, which both reported better than expected results. You actually say technology is the better sector of the two?
Yeah, we're big fans of technology, and you can look at Netflix, for example. They're investing in their future. They're not doing any share buybacks. They're not implementing a dividend. They're growing very well overseas. So they're investing in their future, especially overseas. So they can actually quadruple the user subscriptions over there over the next 5 years. When you look at financials, what they're trying to do is they're trying to manage their balance sheets, right? So they're not going to grow exponentially, especially in the face of rising interest rates, because that could affect M&A as well as bring in some volatility in the marketplace, and they need M&A transactions. They need trading revenue. They're cutting costs, and that's how a lot of these companies in finance are beating expectations.
And another downside, though, to financials are these litigation costs. I mean, we just saw, on Thursday with Goldman Sachs earnings, which took a huge hit because of legal expenses. So how big of a problem is that across the financial sector?
It's been consistently a problem since the crisis, and Wall Street really hasn't changed their way. So people are still nervous. We don't know what the future brings on legal costs, so that is another lingering issue over the financials.
All right, I want to switch gears now and talk about Europe. European Central Bank President Mario Draghi delivered a speech today. He's lifting the emergency liquidity assistance for Greece. Of course, Greece also accepted and approved that bailout measure from its parliament. What's your take on Greece? Is the worst behind us?
The worst is behind us. I mean, this is a lot of political theater that's been happening. I mean, when they did the vote, it was the offer had already expired. So it expired on June 30th. The vote was on the 5th. So it's all behind us. Greece is only 2% of the GDP in Europe. The real driver is actually Germany, right? They're 30% of GDP over there. So it's political banter. Everyone can put it behind them now. The euro is going to stay intact, and growth can continue as it's been forecasted.
Now, Draghi also said that ECB stimulus that began back in March, that monthly purchase of bonds, is going smoothly. Do you think the markets can now finally focus on that rather than Greece?
Yeah, it certainly can. I mean, the numbers coming out of Spain have been well. They beat on industrial production this month. The Centex economic index for all of Europe was at 18.5. They estimated it to be 15, so that beat. So now everyone can focus on actually the fundamentals and the other countries that are doing very well in the Eurozone.
All right, Kevin, we'll leave it there. Kevin Kelly from Recon Capital Partners, thanks very much for coming in.
Thank you.
I'm Scott Gamm, and you're watching The Street.